Friday. Thanks for joining me again today for the latest weekly market insight series directly from the Capital Markets Trading Desk at SunWest Mortgage Company. So let's get right to it. Market tumbled on Thursday after GDP data signaled a significant economic slowdown amid persistent inflation pressure. U.S. business activity expanded in April at the slowest pace this year due to weaker demand. S&P Global indicated on Tuesday that its flash U.S. Composite PMI Output Index, which tracks the manufacturing and services sector, went down to 50.9, a 1.2% decline from March. The manufacturing index reached a three-month low after falling to 49.9. The U.S. economy grew last quarter at the slowest pace in almost 2 years as consumer and government spending slowed down amid a sharp pickup in inflation. Gross domestic product increased at a 1.6% annualized rate, missing all economists' estimates. Exports increased by 0.9% versus 5.1% in the fourth quarter. Imports rose by 7.2% versus 2.2% in the fourth quarter. Personal spending, the economy's main growth engine, increased at a 2.5% pace. Core PCE inflation, excluding food and energy, came in at a higher than expected 3.7%, the first quarterly acceleration in a year. The personal savings rate as a percentage of disposable personal income was 3.6% versus 4.0% in the fourth quarter. The Commerce Department released a report on Wednesday showing that durable goods orders in March increased by 2.6%, meeting estimates. It was a big jump from February's revised 0.7% increase. The bigger than expected climb was mainly due to transportation orders surged by 7.7% during the month. Orders excluding the transportation sector were only up 0.2%, which may be a sign of ongoing manufacturing weakness. Climbing mortgage rates caused applications for mortgage loans to fall back for the first time in 3 weeks. MBA mortgage applications fell back 2.7% for the week ending April 19th. Refinance activity decreased by 6% from the week before, but was up 3% compared to a year ago. Purchases were down 1% from last week and 15% lower than the same week last year. The average 30-year fixed rate climbed for the third consecutive week to 7.24%. It is the highest level since November 2023. New home sales bounced back in March after crashing in February. Commerce Department data showed that new single-family home sales beat expectations and increased by 8.8% to a 693,000 annual pace, their highest level since September. The numbers are significantly higher than February's downwardly revised 637,000. Pending sales of existing U.S. homes in March reached their highest levels in a year in spite of persistently high borrowing costs and a low supply. The National Association of Realtors Index of pending home sales increased by 3.4% to 78.2 last month. Initial jobless claims decreased by 5,000 to 207,000 for the week ending April 20th. Continuing jobless claims decreased by 15,000 to 1.78 million for the week ending April 13th. The downward movement in initial jobless claims signaled short-term resilience in the labor market. An increase in geopolitical risk directed investors toward the safest corner of the market like gold, dollar, and bonds. Gold prices dropped this week after reaching an all-time high this month as Middle East tension eases. Oil prices remained steady after slower economic growth in the first quarter added to signs of declining fuel demand in the United States, while investors also remain concerned about the risk of wider conflict in the Middle East. The U.S. House of Representatives has passed a $95 billion legislative package providing security assistance to Ukraine, Israel, and Taiwan. The funding includes roughly $60 billion for Ukraine aid, $26 billion for Israel, and $8 billion for Taiwan and Indo-Pacific security. Well, that's it for this week. If you like this video, please hit that like button. And as always, join me again every Friday to stay updated with our world news. Our trading desk will have the latest information about our pricing incentives, so stay locked in and never miss out. Have an awesome weekend. Buffy, out.